Good morning, everyone. Today is Wednesday, February the 15th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. You know, I hate having to say the same thing over and over again, but this is where we're caught. We had CPI come in. I thought it was a bad CPI number, frankly. Big spike off the top, fade into the bottom. I believe that we're in a slow drift, sort of to work out all this motion, get ourselves a reversion to the mean, perhaps into the 20 on the day, or, the 10 on the week. The moving averages are still telling us the same thing. Weekly and daily, upward. Monthly, sideways. And so we are digesting motion. And from yesterday's positioning, it felt like a lot of traders really don't know which way they want to go. So they're straddling the fence. And we continue to see that. Today, we just got retail numbers. They were stronger than expected. Now, let's think about that for a minute. Why are retail sales stronger? Because we are a consumer economy and wages are still growing. And so if our wages are still growing, we're going to spend more. And because we are spending more, we are going to have increased retail sales. It's as simple as that. So higher wages are grinding this sticky inflation, right? If you have more, you will spend more, right? We just are not a nation of savers. And really, who could blame the last 20 years on that? Because our interest rates have been, down at the 0 to 1%, right? And 1%, you have to have a stinking lot of cash to make 1%. Now, you can make 4 or 5% and not even be in the market. And so this is driving motion that I think is going to keep inflation sticky. All right, yes, thank you, Anne-Marie. Please be done with your little macro analysis. I understand. So let's look at price. What are we seeing? Are we sitting under the close of the prior day? Yes. So what does that say? Sellers are trying to force price action down to find the buyers. Where are they so far? Well, they're about at the 41.20 area. We've been down there a couple of times, picked it up, come back. Guess where we can't get up and over? Last week's open, 41.35. We get right into that edge and we fade. Now, yesterday's close was above that area. So my suspicion is that we have another day that gives us a fair bit of compression. Now, there is a little storyboard about if Wednesday holds the low, the market should have met the low for the week. Now, the low for the week is all the way down here at 40.76. So we'll have to keep our eye on that and assume that could be a test level if price action gets a little nasty. All right? Nasty, whatever. So I don't think it will, but what we are in danger of doing is having a piece of news that really breaks us out of this compression formation. Remember, the market goes from areas of compression to expansion, back to compression, back to expansion, back to compression, back to expansion. That's the whole thing. That's what a lot of traders will call reversion to the mean, this compression of price that slows down the rate of motion. And we had a January that was explosive. So traders are going to try and digest that. My suspicion, off of this January motion, here we are at the 2nd of January. If I were to put a Fibonacci here, which might be a little bit noisy, but let's go ahead and do it. And I move it to the top of the range, and I look at that and I say, all right, what is the 50% pullback? We give up half the gains from January before we move again. That's all the way down at 40.11. Who knows, folks? Who knows? What we have to see is traders are sitting in a range where some folks think prices are going up, some folks think prices are going down, and you are going to see that in a sloshing back and forth, okay? Big money is going to wait for the deep edges to pick up price right? They're going to try and pick up positions from that perspective. They're not going to be involved in the big sloshy events. That's us as the intraday trader. So what we want to do is look for these lows to hold and then push up. So this morning, pre-market, we dropped into 41.15, 41.10 to 41.08, maybe 41.04, really being that line in the sand. But below 41.35, every bounce into that area is a selling zone. So we have to think about that from this perspective. Now, last thing to look at, let's take a peek at the patterns. What have we done? 2 days down, 1 day up. 2 days down, 2 days up. Now we've got 2 days down again, assuming that we close in this particular area. I think we're noisy all day long. Don't trend. And for those of us that love buying options because we think things are going to break out or whatever, I'm begging you not to do that right now, especially in the ETFs or the indices, unless you are scalping. It just simply is not something to do. If you want to pull something on a deep fade and buy that at the money on the deep fade and watch it move up, you better get out in a flash. Okay, so that's going to be it for the ES. We know these numbers really, really well. Let's take a look at the NQ, and then we'll hop to the SPY and the Qs. NQ, same thing, up above the prior month's high, really trying to get through this area. What are we doing? Holding inside of the prior week. And then again today, look at the difference between the NQ and the ES. Let's go back again. Look at the difference in the daily motion, right? Daily looks terrible here from the ES perspective. NQ, moving. So what's holding up tech? Well, I think it's the AI thing. Listen, we all know AI's been around for like 50 years, okay? It's been around for 50 years. Again, a narrative is taking over the market, and people are thinking to themselves, hey, ChatGPT is going to give me XYZ, and so I'm just going to throw my money into whatever. But this is not a YOLO environment. See, YOLO environments look like this big pullbacks. Every pullback is a buy zone. We don't sit there right now, folks. It's the wrong flavor. It's like going out in shorts when it's 20 below in Alaska in the wintertime. Not appropriate. You can do it in the heat of the summer, but not in wintertime. And so this is sort of our winter, as it were, both physically and metaphorically. Watch the edges. Are we sitting above the close of yesterday? No. What does that mean? It means we have price retracement. Where are the buyers coming in on the Qs? 2 candlesticks to the left. Look, we're coming in at this 12,540 area, and we're trying to buy the bounce there. You're interested there? Wait until that comes in. Watch it hold and then take it. If it bounces up and it can't get up over the close of the prior day, guess who's in charge? Yes, that would be sellers. It doesn't mean that we have price action that's going to fall off the floorboards because we are building higher lows. But the question is, do you want to hold for a big giant breakout? Or are you in an environment that says buy support and sell resistance? Until the resistance breaks or the support breaks, you're going to buy support and sell resistance. All right, let's look at SPY. We have pre-market motion. Great. We're sitting here at the 410. Look at that. Right? I mean, these numbers, how long have I had these numbers here? Weeks and weeks. So what does this tell you? Remember, good trading doesn't have to be a flashy event. It's a controlled event. And look at what's happened in the pre-market. We've held that 409.85. If we open up in here this morning, we're going to have another wonderful erosion. Yesterday, we made a boatload on our 1 DTE. Today, going to be the same thing as long as we open up in this range. What do you want to look for? Down here near the 409.90, let it fade. If it bounces and holds, the fade length of the wick will give you your stop. You can take it at the 409.90 and then ride it up to where? Wherever it stops congesting. Where is that? Well, it's been about 411. Oh, fancy that. It happens to be the close of the prior day. Who's in charge? Well, it's a green candle, Anne-Marie. People are buying from underneath. Yes, but what are they buying into? And what's happening at the top of the range? We are running into sellers at every go. Are we still inside the prior week? Yes. Are we above the prior week's close? Yes. Well above the prior week's close. Are we above the prior week's open? Barely. Just over the edge of it. Right there at that 409, ding, 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 90. That's what we're looking for. That's going to be that area that gives us our buy zones today into the resistance area. Once it loses that edge, if it bounces and you see it not getting up above 410.80 to 411, you've got to get out of Dodge. Let's take a look at the cues finally. Here we go. Taking a look at 306. Right now on that close, where are we? Above the prior week's open. Much stronger, right? But still below the prior day's close. So price action is trying to flesh out a bottom. Look at the same thing, just like the cues. The close 2 candlesticks ago, going to give us our baseline support edge. Let it come in. You watch it bounce. You're going to take the long into resistance. As always, this is just what I am doing. I am not a financial advisor. I do not have any series license to be equipped to tell you what trade to take. I'm talking to you about technical flow and what I do when things come into price. Good luck trading, and I'll see you on the platform.